as of this recording, Big Five Sporting Good sports a 10.16% dividend yield. Now you're clicking on this video, obviously you're attracted to this kind of hefty dividend yield. What I'm going to do in this video, I'm going to answer the question, is Big Five Sporting Goods 10% dividend yield safe? I'm going to look at a few metrics to answer that question, so stay tuned. The first thing I want to look at is Big Five Sporting Goods dividend per share over a long period of time to kind of understand the company's dividend policy. What kind of policy does the company follow when paying its dividend? Some companies pay a certain dividend and keep it at that level without ever increasing it. Some companies have a policy of steadily trying to increase their dividend every year, doing so with modest increases so that they can sustain it. Some companies just play as they go. If earnings are really strong, then they boost the dividend per share. And then when earnings come down, they drop their dividend per share. And it looks like that's the policy that Big Five Sporting Goods follows. When they have a good year, they boost their dividends. When they have a bad year, they drop their dividends. And so this will be good for the company managing its cash policy, right? It's sustainable in terms of cash management, but it's not very good for income investors, for dividend investors, because you're not sure, you can't rely on this dividend per share being stable or increasing over time. You could see here going back, Big Five Sporting Goods dividend per share was rising. And then during the global financial crisis, it decreased its dividend per share. And then it was rising again for a long time. And then just before the outbreak of COVID-19, it decreased its dividend per share. And then the company has done very well since the outbreak. Sales have gone up, earnings have gone up. So the company has dramatically increased its dividend per share. And so investors can reasonably expect a similar policy going forward, that when things are good, the company will increase its dividend. When things are bad, the company will decrease its dividend. So let's look at some more metrics to determine if the company is more likely to increase or decrease its dividend per share. So let's look at its revenue growth going back to 2014, and you could see relatively flat-ish revenue all the way to, between 2014 and 2020. I would say very modest growth. And then the explosive growth after the pandemic. People took to more outdoor activities, more engaging in sports and things like that around the home, buying, basketball hoops and baseball bats and gloves and things like that, maybe fishing equipment and all of these things that became more popular during the pandemic, when entertainment options like going to concerts, going to a movie theater, all of that were closed and restricted. So the other kind of activities gained in popularity, and Big Five sales boomed as a result and jumped to 1.162 billion from less than 1 billion before the outbreak. And then let's look at its earnings per share going back to before 2014. And what we saw is a steady decline up until before the outbreak, and then a big jump right following the outbreak. Sales again boomed, and then that resulted in increasing profits and increasing earnings. And we could saw the jump, we could see why the company increased its dividend per share recently, right? You see that big jump in profits. What did the company do with those profits? It decided to pay its investors by giving them dividends instead of using those profits to reinvest in the company for growth, which in my opinion, paying the dividends was a prudent decision instead of trying to reinvest in the company. It's a brick and mortar retailer. It's historically, over the last 2 decades, brick and mortar retailers have not done very well. So trying to take those profits and reinvest to add more stores, to add more locations, in my opinion, would not have been a good financial decision. This, in my opinion, was prudent. Pay your investors, give out those profits in dividends. finally, the last metric I'm going to look at to determine if this dividend is safe is Big Five Sporting Goods payout ratio. The payout ratio measures the percentage of earnings the company paid out as dividends, and a measure that is lower is more sustainable for the company. And we see here Big Five Sporting Goods' most recent payout ratio was 99.65%, and you can see the trend over the longer term. If we narrow this down to a 3-year chart, you could see its dividend payout ratio has fluctuated from over 180% to close to 0% and now back up to 99.65%. And so a payout ratio that's close to 100%, I would say, is unsustainable, because that means you're paying out nearly all of your profits as dividends. And if your profits decrease, you're going to need to decrease your dividend per share. Otherwise, you're going to pay more in dividends than you earn. And that's unsustainable. Just like a household cannot spend more money than it makes. Eventually, you run out of savings and you exhaust your credit card borrowing capacity. So you have to decrease your spending. That's the same for corporations. It can't sustain a dividend payout ratio close to or above 100%. Big Five is very close to 100%. And looking at all of the other things that we looked at, all the other metrics, to answer the question, is Big Five Sporting Goods dividend yield safe? I would say no, it is not safe. So if you're expecting this, if you're attracted to this dividend because you want to rely on this for the next 5, 10, 15 years, I wouldn't do that as an income investor. This stock is not the one to do that with. The company's dividend policy fluctuates, its earnings fluctuate, and it had a recent big boom in earnings per share. That's not likely sustainable for the long term. So I would not be investing in this stock looking for a steady and growing dividend yield. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.